So then they changed the regulations and said trading has to be a much smaller part. In crypto, none of that exists. You can do whatever the fuck you want. I'm not even sure using customer deposits is illegal in crypto. This is a problem. I mean, I got caught out in another one, a futures brokerage. I mean, this is not a crypto thing. This is a fraud, leverage. Firstly, the central banks are taking liquidity out of the system and have been for a while. That has hit all assets. And so crypto down 75%, much like many technology stocks around. That's been going on. That's been putting the market under pressure. At the same time, when you get to the bottom of the liquidity cycle, if you think about it, if you think there's a bunch of people in the street saying, hey, buddy, can you lend me a buck? You've only got $5 and there's 10 people asking. Well, 5 people aren't going to get it. And that's what happened to the bottom of the liquidity cycle. Who really need money don't get it. And they blow up. So in June, we spoke in the aftermath of that. That was basically the blowing up of the liquidity cycle. All of the people who were running leverage in crypto were getting blown up and they couldn't get any money from borrowers or they couldn't get any money, from investors. June was actually worse than now. So June was the actual damage, right? That was basically the nuke button to say leverage and crypto, as we've always talked about, don't go together, right? So that blew up, massive balance sheets, 3 Arrows Capital, all of them. But one of them was hidden, and that was Alameda. We knew they were a massive shop. We knew they were kind of a bit sketchy, but they kind of said it's fine. At that point, they were probably $9 billion in the hole. Now, we don't know the exact numbers yet, and we won't do for a long time, but they were a staggering amount of money in the hole. And that was papered over by FTX. They gave them FTT tokens, which is the token that is part of the FTX ecosystem that they control and Alameda control, and then gave them a loan against it. But the plot's thickened a lot since then. But so basically they actually went up under in June. So what we're seeing now is the end of the June thing. Then they gave them cash in exchange for that collateral, but that cash was customer money. I have been speaking a few times and said, well, you can kind of understand that if Sam Bankman-Fried is going to lose his entire empire in June, you might be psychologically pushed to do something bad in the hope that maybe you can avert it, right? It is not clear to me that there wasn't systemic fraud in this whole thing to start with. The story is now coming out. It's coming out in waves. And again, nothing is verified here, but it's starting to appear that FTX was just a front for Alameda to capture customer order flow to give them an advantage. It's now becoming clear that FTX and Alameda, because we can now assume they're basically the same entity, which is very bad to have a trading operation that takes advantage of customers. We've also seen that they changed their strategy, and it seems that the Luna debacle was them just providing liquidity all the way, and it blew them up. And they pretended it didn't hurt them. But it seems that Alameda itself had changed what it was doing quite a while ago and was basically a punter. Again, news flow's coming out slowly, but it feels like there was never any proper accounting. That there was never any customer positions that weren't being used by Alameda. Again, not clear yet. There was no particular Bitcoin or anything else that you thought you bought on FTX that was being stored for you. That it was just a giant pool of cash that they were just abusing. And it's becoming clearer, even after Sam Bankman-Fried's tweets recently to a journalist, that maybe he constructed his whole personality as well, and that none of that was real. We'd gone through this, which was the banks used to be trading firms and would have customer. And there's famous shops like Salomon Brothers who were huge at this. And then what happened is they would abuse that because they wouldn't take the customer money. Well, they kind of would because it's all the same balance sheet. So the bank might blow up, but they would also trade against the customers. And then the regulator said, no, you're not doing that. In 2008, the trading side blows up of the banks and the customers are going to get hurt. So then they changed the regulations and said, trading has to be a much smaller part. In crypto, none of that exists. You can do whatever the fuck you want. I'm not even sure using customer deposits is illegal in crypto. This is a problem. I mean, I got caught out in another one, a futures brokerage. I mean, this is not a crypto thing. This is a fraud, leverage thing, because that little pot of gold, which is customer money, people just can't keep their eye on the precious that's over there. They want it. They can use it. I can make return on capital. And then it goes wrong. So this story is as old as the hills. It's a deep fraud. It's an accounting fraud. It's a cult of personality fraud. It's many, many things. It appears. My hypothesis is this was the final outcome. This was the whale that happened, right? The end of the crisis. So I think, yes, there are going to be some other firms that get into trouble, but pretty much all of the levered trading houses, the levered customers all got taken out quite a while ago in between January and June. The levered trading shops, the people who were lending money to the trading shops, people like Celsius and BlockFi, all of those guys, they've all blown up. So they will probably be smaller aftershocks if they failed. So what we've got is peak freak out because the earthquake happened and everybody's hypersensitive. I've never in my career seen sentiment like this, both in crypto and the stock market. So there is an expression, Warren Buffett's used it, is when the tide goes out, you see who's swimming naked. So the tide out in this is liquidity. And liquidity is driven by central banks trying to stop inflation. So they raise interest rates when they think there's inflation. It slows down the economy. It's harder to borrow money. The whole economy slows down and we restart. It's called the business cycle. And you and I have talked about this in the past. So the central banks try and soften that cycle, but they still create it and use it to try and not let economies go too far, like hyperinflation or depression, whatever it is, right? So that's what they're trying to do. That cycle drives the movement of asset prices. And so that's the stock market, the bond market, equity market, the currency market, the crypto market. And with that cycle becomes the human emotion cycle. And the human emotion cycle is, I'm making a fortune, I'm a genius, I can never go wrong, I'm going to be rich. And if you think about it, and that's exactly what happens to all of us, and we have to fight that demon, is you start extrapolating out and you start thinking, my vision of my future self has now been ratcheted up. So investments are just a manifestation of your future self, right? That's what we're trying to do. So you got that vision of what you'd like to be, and to get there, you invest because that will deliver that. So if your investments do well, you start stupidly readjusting yourself higher all the time. So then what happens is when the market goes against you, you have to go through the emotional inner journey of, oh, maybe I won't get there, right? That's really hard for people. You then over extrapolate on the downside. If this continues, crypto is going to zero. All of my savings that I've been dollar cost averaging, listening to Tom and Raoul, it's all bullshit. You know, this has been a scam. It's the exact opposite. On a log chart, it just looks like it slowly does that. On a linear chart, it looks like this. What happens is everybody goes, when it goes up on a linear chart, everyone goes, it's a bubble. People who aren't involved. Then we all get to the over extrapolation of like, we're all going to be billionaires, let's order my land. Then it starts coming down, it's denial, typical, you know, the human phases of emotion. And then you get to anger and despair, which is where we are now. And it's as simple as that. So to go back to what you were suggesting, has anything changed in the crypto market? Not a thing. Is the technology being utilized? Has Solana just agreed to use their blockchain with Meta for NFTs? Yes. Are Google working with Solana? Yes. Is Ethereum being built out? Did DeFi fail? No. Does the decentralized financial system idea work? Yes. Are cryptocurrencies being exchanged in a value system on the internet? Yes. Is the number of people growing in that ecosystem? Not a lot. Past cycle, so the 2017 peak to the low in 2019, we lost about 80% of the active wallet addresses. When I look at it now, we've lost about 30. because the adoption keeps rising. We're not involved because we can make money over a 1 year time or a 2 year time. We're saying, listen, the bet here is if you hold on and if you add at the bottom of the panic cycle and just keep holding and don't use leverage and just be sensible about what you're doing and don't keep checking the market every day, the probability of you coming in at the end of the decade and having manifested your future self in a way that probably might be quite unexpected. And if you do that, you won't go through that emotional journey. Everybody got this wrong, and I've been bleating on about this forever. Inflation is a generalized rise in prices. Debasement of currency is this really weird little trick. Things of fixed supply or relatively fixed supply go up immensely, optically, because the price of the currency's fallen. Things of variable supply, like wages, corporate earnings, don't, and they don't go as much. So what you find is, after quantitative easing, what happens? Stock market goes up, gold goes up, cryptocurrencies go up, housing goes up, fine art goes up, all of that stuff. Assets. So assets are a way of storing wealth. That's what an asset really is. In relative terms, they've held their price and the currency's fallen, makes them look like they've gone up in price. And this is what everybody gets confused with. This is why price earnings ratios have gone up so much, because the earnings doesn't move as much as the price of the asset because it's a small fraction of it. So PEs keep going up the more we debase currency. So it doesn't create a generalized rise in prices. This is what everybody confused, because they thought it was an increase in the money supply in a way that you and I could get it, we can go buy more stuff. It doesn't work that way.